Here's an excellent example of a great first red day trade. At the beginning of a week on a Monday, we have a market that takes out the previous week's high. So we get a vertical move, Japanese yen, and they reverse. There was a few news announcements on that particular day. ISM Manufacturing and Federal Chairman Powell spoke on this particular day. But that closed as a first red day on the Monday. There was no news scheduled on the Tuesday. And again, we have our previous Friday's high breakout level that has failed. So we've got a market that's gone up in 3 pushes and then broke down. So we have our peak formation high in place. The market then, we're looking for the 3 peaks on our first red day for the high of the day sell. Ideally, we get 3 sessions, Asia, London, and into New York for the sell for the whole day to become order flow for a move down. We get that right at the New York Open. This is a 15-minute chart. The engulfment on a 15-minute chart, we have our, again, rising trend line, trapping volume up in the upper portion of that box. That's what gives us that coil for the explosive short trade down. So even on the 15-minute chart, this still allowed traders to keep their 15, 16 pip max stop loss. This market went down 68 pips from entry to the low on the 15-minute chart. Again, even if we throw our 20 EMA on the 15-minute chart, it's about the setup day. The setup day is first red day. We've got our false break. They trade back up into it. There's no news on the schedule. This is a textbook perfect opportunity to size into this move down. And then we get a day 3 Asia blow off. So on day 3, the market, so we have Monday's day 1, the high of the week. Day 2 is our first red day trade short, continuing the move down. And we get a day 3 blow off setup in the Asian session. Peak formation up into the move down, breaking down into the open of the session for an easy blow off of 50 pips. So 2 really textbook perfect trade opportunities. We'll just zoom out again a bit. Monday, first red day. So that's our day that's gone up and made peak formations and broke down and closed below the open. Then we get our first red day trade setup where we get the 3 pushes up into the collapse. 3 sessions, Asia, London, New York. US puts the anchor point low in. They drag traders up. We get our engulfment and our M structure right at the New York Open for an absolutely textbook perfect first red day short for 60 plus pips if you held it, or if you took the money. Next day we had an Asian blow off for 50 pips right at the beginning of our day 3. That's what triggers breakout traders into the market at the low of the week before reversing and trapping traders down low and heading back in the other direction. First red day on day 2, Tuesday, and then a day 3 blow off for 50 pip move in the Asian session. Excellent perfect first red day trade setup.